One of the easiest reversal patterns to work with is going to be the double bottom or double top reversal pattern. We also call this the double bottom W formation pattern. Why? Because it looks like a W. If you look at the chart over there, it looks like a W. The double top looks like an M, which is why it's called the M formation. And it's very simple. Price action comes down quite aggressively. It finds a stopping point, bounces, creates a lower high, and then you should be looking for a lower low, right? Trend continuation. But if that lower low does not come and you see price bounce at an equal low level, so the same level, then you know there's a potential W formation in play, that being a double bottom, looking for price to move up. And this is exactly what takes place over here. The same thing is true with the M reversal pattern or the double top formation. Price moves up, finds a top, comes down, bounces. Instead of having trend continuation, it stops at exactly the same place and begins to reverse. You now know that you should be focusing on the potential for an M formation, meaning lower prices are to come. Now, how do you work out the measured move off of this pattern? Well, if you have a look at the chart, I'm going to show you in a very simple form. You're simply going to take the point where the double bottom or where the double top took place. So for this instance, let's focus on the W formation. We're looking at the double bottom over here and taking from that point, moving up to the top section over here, the tip top of the W. That line is going to be your measured move. You want to copy and paste that line from the breakout point. As soon as you break the neckline, which is this yellow line, you can expect that your measured move should meet that level. When I show you on a real life chart, you'll see how it meets up with resistance on the left hand side as well. Now the same is true. Let's just quickly, for the purpose of this video, go over the M formation so there's no confusion over here. Price comes up, here's your top, it reverses. So you're measuring from this point all the way to the top to that point. So copy and paste that line. When you break the neckline, it should take you to the measured move. Look to the left-hand side, you should find support over here. Let's look at this real life example of a double bottom formation, also known as the W formation pattern. So price stalled out over here, then proceeded to move down quite aggressively. You can see the wicks. Remember what you learned in the candlestick lesson. You can see the wicks over there. Demand is kicking into the market and price moves up over here. Once it rejects and starts to come down, and again zooming in, looking on a low time frame, you'll be able to see via the candlesticks that demand is kicking in from the bulls and this level is being defended. At this point, you should already be aware that there's a potential W formation at play. If you want to play this as a more aggressive trader, you can already start to look for a long entry at the first sign of bullish signals. You can tell this by the candlesticks, right? You can see the demand kicking in. Once that candlestick closes above the bottom over here, which is the horizontal yellow line, you now have your trade signal to enter. So you enter that trade with your stop below the bottom wick of that candle and price moves up. As it gets into this region over here, this is a potential resistance zone and you have the choice of taking profit or compounding if the market shows strength and looks to want to continue. In this instance, you can see the candle starts to close above. So the next candle, you look for an entry. You gain your entry, you now place your stop below those wicks, and ultimately price continues meeting the measured move target. Remember, the measured move is calculated from the double bottom line, which is this one, and moved all the way to the top of that W tip. That works out your measured move. If you look to the left-hand side, this is also a liquidity zone. Liquidity is a concept you're going to learn a lot more about in a future lesson. So left-hand side, resistance, price meets the measured move, and it was a perfect trade. You doubled up on those. The first trade was a 3.78 to 1 risk to reward ratio, and that led to a massive 28.95% upside move. The second trade was a 4.37 to 1 risk to reward ratio, leading to another 23.26% move above and beyond the first one. Now let's have a look at the bearish example, which is the double top or M formation pattern. It works in exactly the same way I've just explained, only in reverse. So price moves up over here, finds its first top. It then comes down. You can see the candlestick over there, the demand that's coming in, showing you price is probably going to bounce from this level. You're taking it from the closing candle basis, right? work out from bottom to top is your measured move. You can copy and paste that over there. Now you simply just observe and watch price move up. As price moves up, the candlesticks are showing you that it's probably going to reverse from this point, thus confirming your thesis that maybe a double top formation is in play. So you look to get a short entry. You put your stop above the previous low as well as this wick over here, meaning price should not come back above that level. In this instance, price continues towards the downside, and you have an opportunity to compound on that trade with an additional short when you break that neckline down. That's exactly what happens, and price goes beyond your measured move. At the end of the day, it's another successful trade, and the measured move was in fact met. In the next video, we're going to be covering the falling wedge versus the rising wedge pattern. So I'll see you in the next one.